Good morning, everyone, and welcome to Morning Market Movers this Monday, March 28th, where we do live analysis for day trading, take a look at hotspots in the markets for the day. I mean, there are some things moving around a little bit. It's not crazy. The markets were slightly in the equity markets were slightly in the green. Now they're slightly in the red. I mean, they're a little bit mixed. We're waiting to see what the retail trader wants to do once they come into the markets in 45 minutes, where we do have some volatility. Yen. The yen has been making some fairly significant moves against both the dollar and the pound. It's the dollar yen is up near highs that we haven't seen. I want to say since 2015, roughly. So it's been, you know, seven-ish seven-ish, maybe eight-ish years since the yen's been up this high. But again, yen weakness, not necessarily a bad thing, but we are seeing some volatility there. We've also seen oil backing off a little bit off of some highs we saw last week. Not that it was down anywhere, it's still well above 100. I think it's 108 right now, but backing off a little bit from some highs that we saw last week. So we do have some things moving around. Before we jump into the charts and take a look at the charts, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. Just to give you a glimpse at the yen, you can, in this is a daily chart, but you can see how in the last couple of weeks, the yen has just seen some fairly significant weakness. We'll zoom in a little bit closer, take a look. I mean, but this just kind of gives you an idea of how the dollar is strengthened against the yen, and it's a fairly significant movement, and a lot of this has been in the last 2 weeks, and seeing similar-ish move against the pound as such. But we're going to jump into the rest of these. We'll take a look at oil, and even gold's moving a little bit. I'm going to go, Brian. Let me flip it over to you. We could take a look at some of the headline news. There's just not a lot of news, but we do have markets moving.
Sure. Yeah. I mean, I actually would say that there's a decent amount of and it's explaining why the markets are moving the way that they're moving. So obviously the yen being low is a problem, or you may say problem, but obviously the yen moving, we talked about it last week a lot about how really it's not really a bad thing that the yen is low. If you look at the spike up in the price, yeah, it spiked up till 4:30 this morning. And then here was the comment from Japan. It says the current weak yen is positive for the Japanese economy. Further weakening beyond 130 would cause a problem. Currently, it's only at 123. We're nowhere even remotely close. And as I mentioned last week, they rely upon a weak yen um, because they are an export-based nation. Their entire economy is based on exporting things. So if they have a very high-price yen, it actually hurts their economy in the opposite direction. Everybody would think that, well, no, strong currency is good. It's actually bad for export-based nations. Typically, when we see them intervene, it's because it's getting too strong. Too weak is great. And again, 130 is where they say, yeah, it can become a problem at 130. We're at 123.37. We have so much room to run. And in the big context of things, I mean, I can barely even get it on a chart. Here's your horizontal line up here at 130. That's far. That's how far it needs to move. And I'll shrink this back again. You can see it has a long way to go. And one of the big things that they mention here is if it does go higher, all we have to do is do a rate hike like every other nation in the rest of the world, and that would correct us right below 130. So as far as scenarios go for Japan, this is literally the best case scenario for them. And again, we mentioned this all last week that this is something that again, it's great for their nation. They're happy about this. This is the way that they function. This is the way that they choose to function. Um, what's happening here is the exact same reason why China controls the rate of their currency. They're not a free floating currency. They're not considered one of the major eight because it's not a free market. They peg it so it does the same exact thing. It keeps their currency cheap, so it's cheap for other nations to buy from them. Also, in my opinion, why Russia has not really cared about the sanctions and said we've lived through sanctions because a weak ruble also makes them now an export nation when people want to buy things from them. So again, the yen moving, I'd be very cautious with trading the yen today. We've already hit its peak, and you can see it doesn't matter which one. If we look the Aussie yen, you can see in the last 60 minutes, it's already moved a lot already in the last 60 minutes. It's up big still, right? 144, but we are definitely retracing versus the pound, dollar yen and pound yen pulling back in a major amount, right? And it's funny, you can see the Last 24 hours, it's up 0.56%, but the last 60 minutes, it's down 0.65 or 0.64%. So it's actually more down in the last 60 minutes than it is up over the last 24 hours. So both of those, I would say, are very similar looking charts. There's no need to dive into them. This one is actually almost retraced all the way back again. And it's people kind of realizing, looking at headlines, like, oh my God, the yen is weak. Yeah, but that is beneficial to Japan. So that story, I would say, is again, you're not going to be looking to short this one immediately. It's going to probably find buyers again, regardless of which two. And again, looking at kind of the last big push in the yen, the dollar yen, you can see right around the 50% retracement level. It's definitely an area where we had a nice push, some basing coming in. I'll draw it sideways here, right? That's going to be a level that you want to watch out for. It's going to be a target first, and then a potential reversal level off of it. And I wouldn't be surprised. I wouldn't be surprised at that one. Hitting that level 122.98. Really, it's really kind of more just 123. Should I click this right here to 123, and you'll see it'll be right on the line. Right there, sitting right on the line where the testing came in. So I would say that would be target first, a drop of another 50 pips, and then look for a potential bounce off of that one. Maybe even at like 10:30 today. We'll see. And again, I would expect this is going to be a week of dollar strength because so many people mentioned it last week. Every week we roll in, this will be the start of a new month. We'll start hearing more about that 0.5 interest rate, and the market will start positioning. So I think there's probably some opportunity here, but understand it's not the gloom and doom that the headlines are painting. And Sakurabara has already said it. It's not a problem until 1:30. We got 700 pips to go. That's a lot. So that's one of the big news factors for this week. Another one, obviously, again, there's headlines that just came through a little while ago. Oil is obviously back. Again, oil right now is moving down, but this is typical for what we see on Monday mornings. Last week, we talked about this one kind of grinding lower into the 107, the 108.30 to 107.10 area, and we're kind of sitting there right now. When you say the headlines, obviously, there's been some articles, there's some statements made. There's the what's now called "cannot remain in power" comment by Biden. A lot of people are very concerned about that. Again, a guy that mentioned, yeah, we could use nukes if it's if it's going to threaten our existence. Saying you're going to remove a president from power typically only goes one way. Is he going to take that as a bad thing? Potentially, who knows? I mean,
he didn't say he was going to remove him. He said he needs to be removed.
He said he can. He
or
said
he can't stay in power. He can't stay in power. Well,
which is removal of power. So again, both sides of the aisle, the White House, Republicans, Democrats, they've all gone back. That's not what he meant. That's not what he meant. That's not what he meant. But we know how bad that the Russian translator is anyway. When we see their headlines, look at how they're going to take it. And again, Putin, he understands English just fine and well. And if he's looking for an excuse, the president of the United States just gave him the excuse to do that. So Zelensky, on the other hand, is talking about, hey, we want immediate peace. We will sign the non-aggression pact. We will sign the no NATO neutrality, give us security guarantees. And again, I think this is feeding right into Russia's hands. Again, the war of attrition, they say, is starting to finally hit and finally kick in. There's pros and cons of both sides of it, but it is what it is. But again, as far as what that does to oil, there's some headlines that we've seen this morning that have come out. The first one is this. The UAE energy minister basically said that we're not leaving OPEC plus. They don't see Russia leaving OPEC plus. OPEC plus needs to stay focused and not allowing politics to kick in utilization. It needs to stay out of politics. I believe Russia will remain OPEC plus. OPEC plus must stay out of politics. They're very big into that. And the energy minister says no one can substitute Russian barrels. Again, the organizations that's really dictating the price of oil is saying we can't replace them, guys. We need institutions like the IAE to be realistic, wise, and don't tell the world information that is misleading. So OPEC Plus is kind of not rallying, but also supporting Russia in that. And remember, OPEC Plus is really determining where the supply is coming from and how fast they're going to bring the COVID supply back online. It's an interesting story because then we got this a little while ago. That Russia says that if G7 refuses to pay in rubles, they're going to stop the supply. They're just going to halt it. It's not negotiable. You're going to pay in rubles or you're not. And again, this is the problem with weaponizing the dollar, because right now it's not that we don't have the oil. It's that if you don't want to play their game, the people that have it, you can't have it. So again, there's a lot of factors out there. And actually, this morning on Financial Times and Yahoo actually both agreed that they're warning that they could see oil prices up at $200 a barrel. Depending on how this week goes with peace, paying in rubles. And like I said, this is the problem using currencies, because now they're doing, Russia's saying that the same thing. You're going to pay in rubles.
Well, they're going to try to support that. Right. Well, they're going to do anything they can to drive demand for the ruble because it's gotten absolutely decimated. Now the ruble's trying to have a comeback, but yeah, they're going to try to find ways to support that ruble by driving demand for it. Um,
and they can. It's not
yeah,
trying. It's they can.
yeah,
If they halt supply, guess what's going to happen to oil? And
yeah.
again, all of these things further deteriorate the U.S. dollar as the world's reserve currency. So again, that's the big picture. And China's eating its popcorn, saying, "Ha yes."
Yeah.
So they're happy about it. But I think oil definitely be looking for buying opportunities, particularly with everything going on. We know we have buyers in that area. Typically on Monday mornings, we see the U.S. trader come online and we see oil start to pop up and spike. It did take kind of a big rally up and then kind of came back. Excuse me, from where our highs were. But I think oil is going to be a very big headline this week, particularly, again, if they cut supply, that'll be immediate huge pop. And again, everybody from OPEC Plus, remember, Saudi says no. Saudi agreed that they will, start doing things in other dollar nominations. Again, UAE also jumping on board. So not necessarily the best headlines for those of us with gas cars out there. Again, maybe we looked at the natural gas conversion, something like that. But again, not necessarily the best. Um, and really, that's it for headlines. This week has a lot of good news in it. But right now, on the currency front, obviously dollar strength coming back in. That point 0.5 is definitely a big boom for the dollar this week. And again, you're seeing the pound. It's like, wait, is this pound weakness? Not really, because euro pound is up 44. It's a little bit of pound weakness, but again, versus the pound yen, it's up big. So it's really kind of positioning ourselves. And again, I would say early week, I would look for the pound to reverse because it is a little bit weak versus the dollar and the euro. I would look for the yen to continue to get weakness, but I think there's going to be some buying opportunity there. And I would definitely this week look for, and again, you're seeing things about the greenback. I would definitely start looking for dollar strength because we will start to hear more mentions of that point 0.5 and what it looks like. And then in other news, again, we're seeing the treasury yield. A lot of people don't understand what the
Yeah.
treasury yields really kind of go back to, but again, understand that all you need to do from this statement is understand when they're making a headline saying it's inverted for the first time since 2006. Think about what happened in our economy in the 2006, 2007, 2008 time frame. If this hasn't happened since then, what does that kind of foreshadow what's coming next? So, you know, take it for what you
Yep.
will. I'm not gonna call it out,
Yeah,
but understand when something hasn't happened, then
and
it's big.
just yeah, just I mean that just means the short term. I mean, we're raising short term interest rates, and the markets are going to react. Short term interest rates being higher than long term interest rates is odd. I mean, you would think that normally, yeah, if you're going to borrow money for a longer period of time. So the concern is short term disruptions, and then the question then comes into what's going to happen with long term recovery. So yeah, we've got some
Yeah.
there's some bumps in the road here in the short term, and we're definitely seeing them.
Yeah, I mean, VIX is up already 5% for the morning. Again, the weekend kind of brought it down a little bit, but we're seeing some push. Again, that comment just minutes ago from Russian delegates, not necessarily the best because again, cutting supply, it doesn't really affect the United States that much, but it does affect other people.
Well, and if it
Dollar's up a little
expects
bit.
global supply, there is a weird
Yeah,
move though.
global supply, not us. Yeah,
Yep.
it's not necessarily us. What it has done though is it's turned all the indices in the red. Not by much. NQ's holding firm at just a little tiny fraction down, but everything else now is officially turned into the red for the morning. So that's going to be something to watch at the open. Look for some pullbacks, particularly because if everything is turning red now, it's pulling back. Something like the ES, you can see that the ES is already bouncing off the zone that we talked about, but that area where it turned, that 45, 48 level, that all of a sudden is now going to be set up for a trap because if people see a push above that, they're going to say, "Oh, we broke past Globex highs. That's it. Go long." That's where those bull traps come in effect. So again, we do have a trap, a trap area in ES. NQ, we have actually one from last week, so we got a little bit more on that one. YM, we also kind of have a trap area, and it's a level that we talked about, the 34,852. And then also Russell's a little bit more tempered right now. It is the weakest of all of them. But I would say right now, I mean, just looking at this, you can see that there's sellers there, sellers there, sellers there. And that's exactly what we ran into with these sellers. So not necessarily the best area for Russell. I would say it probably has some more down run as well. And again, the markets are all going to digest and talk about, the comments. Again, talking about removing another president. I don't disagree with the comment or the sentiment, but I think again, of all
The
crazy people to
politics,
make a
yeah.
comment about,
Can we
yeah,
just take a quick peek over at gold because you mentioned this earlier, and it's just strange because we saw we saw gold do this last week too. I mean, it was trending lower in the evening. It just and then it just caught a buyer. I mean, it's just kind of weird. It just took off. Um,
yeah. I mean, it from the high from late last week to the low in the overnight at 5 o'clock this morning, it took off and spiked up. And again, there's a couple reasons. Again, the G7 comment may be part of the reason for that because it's kind of a commodities thing. But most likely what this is this is the U.S. The big. I mean, again, the candle was the 8 o'clock candle. It just happened to be at 8 o'clock. It took off. Most likely, this is American traders coming online. The problem is it came back up, and you can see it ran right into a 50% retracement off of last week's high and an area where we had a big push, a base, and then a push off of it again. So the big question is, are we going to have the full reversal? And I wouldn't actually be surprised if it does reverse back down again. With all the other commodities right now in the red, and again, silver pretty deeply rooted there at minus 1.61%. Wouldn't necessarily be surprised, but it did make an attempt. Again, it did trigger these 50% retracement traders before the market opened. It'd be kind of interesting, and again, just to see if there's anything else in there now. There's nothing. There's no other major headlines right now. So again, if anything, it was the G7 comment about the ruble, because again, bringing things to the ruble, then the talk is, well, what about gold? What about gold?
Yeah. And they're
So
sitting on, because they're
that's
sitting on top of it.
probably what popped it. If somebody knew this news ahead of time, is probably what it did. I mean, maybe the yen, but the yen doesn't typically have that much control in gold. But the big question is, will it break through that 50 or not? Again, there is an area of sellers there, so in reality, had you been looking at this ahead of time, had you done your homework, you'd be sitting in a position like this right now. Again, it's got to come back down to 1 to 3 is right here, right? Which again is the start of the move, which is exactly where you would want it to be in, right?
Right.
So,
All right.
that retracement level, just so you guys know, is here, 1931.
Perfect. All right. I mean, it's definitely okay. Definitely a mixed bag of things going on here this morning, this week, and it could be an interesting week. We've got a lot coming up to look forward to, and some economic news later in the week as well. With that, any questions for Nadex, please email us, customerservice@nadex.com. If you want to catch up with Brian, you got any questions for Brian, please email Brian at support@keeptradingsimple.com. Really, it is a mixed bag this morning. Equities slightly red, slightly green. I mean, just kind of a little all over the place, not doing a whole lot. Oil pulling back a little bit, gold making some interesting random moves, so we're seeing some volatility there. But really, what the headline news, the big news of the day is the yen continuing to see weakness, and again, not necessarily a bad thing for Japan, but we are seeing a fairly significant move there with the yen against both the dollar and the pound. Brian and I will be back again tomorrow morning. So thank you everyone for joining us this morning. Hopefully you'll catch us again tomorrow. And until then, good luck in the markets, everyone.